She is one of India's most powerful bankers, and when she talks, everyone takes note, from policymakers to CEOs to investors. Chanda Kochhar, such a pleasure chatting with you here at ET now. Let's first talk about the big picture, because just a week ago there was a fair amount of trepidation on the course of reforms and the direction in which reforms will move. Much has changed in the last few days. The government has moved aggressively on a slew of FDI reforms. How do you read the intent behind this move?
I think the intent has always been very clear, and I see the intent being reinforced now, in fact. Clearly there's an intent and a lot of hard work behind saying that we need to take the country in the right direction, whether it's around administrative policy decisions, whether it's around legislative changes, or whether it's around ensuring macroeconomic stability.
Sure. In an interview to ET now, the finance minister said that there is a lot of scope for executive decisions, and we'll talk about legislative logjam, but there's a lot of scope for executive reforms as well. Do you agree with that? And what are the key executive decisions that you think that the government can take to push forward the reform process?
No, I entirely agree with this. In fact, I have always been saying that while the legislative reforms are very good, but there is just so much of low-hanging fruits by making sure we take the executive decisions, and I think the government is actually moving in the right direction. There's a lot that can be done to complete so many good things that have started. For instance, all the work that has started on power, if we complete it with the SEB reforms, we can see PPAs being signed, case 1 bids happening and so on. Similarly, if we look at the larger projects, so much has been done to sort out the procedural delays. If we stitch up the last mile things together, that can really become a big kickstarter in terms of generating cash flows in the Indian economy.
But there is concern on the legislative front, especially given the political climate. One is not sure if GST, which is considered the most important reform, will go through. How much of a disappointment will it be if we see GST being stalled once more?
Well, I think everybody wants GST, so when it comes, it's going to be a great thing. But as I said before that, there are so many more things that we could do. I mean, on the other hand, if you just look at what we are saying on the roads and highways side, the minister is saying that we'll almost double the current level of construction from say 96,000 kilometers per annum, take it to 1.5 lakh kilometers per annum. I think that becomes a huge multiplier factor in the economy. Similarly, railways has kept a lot of projects ready, and as they go on stream, that becomes a big kickstart to the movement in the economy. Defense could be the next one. Again, a lot of work is being done on the coal side, the increase in coal production, the efficiency in coal movement. I think these are all the administrative things that can add a lot to economic growth.
So if I'm getting you right, you're saying executive decisions can make up for a potential legislative logjam currently?
Absolutely, and I think executive decisions are really very important to in fact kickstart the whole process.
Let's talk about the FDI reforms that were undertaken just a few days ago by this government, specifically in the banking sector. FDI fungibility for private banks. How beneficial is this for the banking system as a whole?
It kind of takes away the two sub limits that were there in the whole entire foreign holding limit. So I think it just makes the process simpler. It makes it more flexible, and therefore just increases the possibility of participation of foreign investors even more. Of course, ICICI Bank always had the specific approval in this regard, but now it just opens it up for various other banks and makes the process much more flexible.
Right. So even in the case of ICICI Bank, I think foreign investors own about 67.3%. Combination of investors. Do you see appetite for more foreign capital?
Yes, clearly, because the limit is 74%. Yes.
But you don't worry about the possibility of more volatile flows coming in by virtue of having this 74% cap? That's not a concern?
No, actually, as I said, the 74% cap was always there. It's just the sublimits that have been taken away. Whereas for us, anyway, the sublimits did not exist. So I think it just increases flexibility, actually.
Let's talk about DISCOM restructuring. You briefly touched upon that as well, and that's a key reform that the government has undertaken. But in your view, will states assuming the debt and floating bonds, is that going to solve the problem on the balance sheet of banks? Is that, is that really enough, and what more needs to be done?
Well, as I see it, as far as DISCOMs is concerned, it has to be a combination of two parts. One is the existing balance sheet, and therefore taking care of that. The second is, the losses or the reduction in losses going forward. The current thing that is being spoken about, or which most people are actually talking about, is just the first part, which is
Sure.
taking away, the current burden from the balance sheet of the state electricity boards. But it's also accompanied by the next part, which is pinning the states down on reduction in TNC losses as we go forward. And I think that's very critical. So, the combination of sorting out the balance sheet issues currently, backed by, clear commitment from the states that the losses will come down in future, I think that is how it makes the reforms comprehensive.
So in the absence of the second leg, you're saying...
No, I'm saying it's not the absence of the second leg, because the government is clearly talking about that. So as they kind of firm up this arrangement state by state, I'm sure they'll firm up the arrangement on both ways. That is, sort out the existing balance sheet and get the states to commit on the next part, and that makes the reform wholesome.
Right. Let's talk about the macro picture as well. And the last time as well, we spoke about it, the investment cycle during the budget day. I remember we spoke. Are you disappointed by the fact that the investment cycle has still not turned? It's been 17 months of this government. Everybody in corporate India thought it would have happened by now. Why, according to you, has it still not turned?
Again, I would say two things. One is that, we should understand why the private sector investment cycle has not picked up. And the second is, we should not make too much about it, because there are other things that are happening that can actually kickstart the economy and are kickstarting the economy. I think as far as the private sector is concerned, currently, a lot of their cash flows are tied up in projects that have just got completed or getting completed. And till the time these projects generate cash flows, the debt on these projects has already been taken. So till the time these projects generate cash flows, you will have less scope for them to start investing in the new projects. So we have to wait for these projects to clearly start generating cash flows. But in the meanwhile, as I said, a lot has happened on the macroeconomic side, whether it's current account deficit, fiscal deficit, inflation control, interest rates. That's one part. The second is really on, factors that are churning the economy, whether it's coal production, whether it's giving out of mining licenses, whether it's, the whole push behind roads and highways, the likelihood of railways and defense now kicking in. And I think this is what is churning the economy currently. And then it should be followed by private sector investment as those issues get sorted out.
So in your view, are we still, 12 months away from private sector investment revival?
I think so, yes.
At least 12 months?
Yes, about 12 months away,
right.
yes.
But also the mood of corporate India, Ms. Kochhar, there was a sense of euphoria. I think now there's cautious optimism. We haven't seen a revival in corporate earnings as well. They're still lagging. Brokerages now believe we are probably 3-4 quarters before we see a revival in corporate earnings. I'm talking about corporate India in general, not ICICI Bank in particular. Do you think now people are more cautiously optimistic about the pace of reforms that we've seen over the last 17 months?
No, I think we must remember that, whether we look at, it's not just about India, when we look at even globally, times are very challenging, and one cannot deny the fact that commodity prices are so low, and in fact my belief is that they will continue to be low for some time to come. The financial markets keep being very volatile. Now all these things do impact the overall economic activity, and the mood of the industrial sector, I think, moves on account of various such factors. So it's not to say that work has not got done. I think a lot of work has got done, but at the same time, yes, even the global scenario is such that one has to be just cautiously optimistic about everything.
What will also help change mood is another slew of rate cuts. We've seen some move on that front, and I'm not saying that a rate cut will revive the investment cycle, but that will probably help aid the mood as well. How much elbow room do you think there is for the RBI to cut rates in this fiscal year?
Yeah, I think as far as RBI is concerned, they've done 125 basis points. They said very clearly they've kind of front-loaded some amount of that cut, but I still think there's a elbow room for another about 25 basis points up to this fiscal year. But that's the RBI monetary policy. I think as far as the bank lending rates are concerned, you would see a little bit reduction even before any next monetary policy reduction, because the cost of funds for the banks continue to come down.
And by how much would this
so
reduction be?
That of course is going to be every bank's ALCO's decisions. Yeah, but you would see that rate cut irrespective of whether the monetary policy rates get cut.
So this is likely to happen even before the next policy in December, you're saying? Sure, but do you think the other issue that the governor will also have to keep in mind is a Fed action? And there is some amount of uncertainty. Now, markets are beginning to price in a likely Fed rate hike in December itself. Will that also weigh on our mind, and how prepared are we to tackle the volatility that will come on account of a Fed rate hike?
Well, I think the Fed rate hike now has been expected for long. So in that sense, it's not going to catch the market by surprise. And also, if you look at India's macroeconomic conditions, I think we are actually much better placed than any other country in terms of our foreign exchange situation is concerned. If you look at our reserves are at very comfortable position. We cover substantial number of months of imports. Not just that, even when you look at our currency, it's performed much better compared to most other currencies in the world. Whether you look at it in the last 3 months or the last 1 year as a whole, I think comparatively we are in a much more stable position.
But since you spoke about the currency, there is a theory doing the rounds that we should probably allow the currency to depreciate, and that it's hurting the competitiveness of our exporters. Are you of that view, or do you think that the currency is fine where it is?
Well, I think the currency will move as per how markets move, but it's not really. I think the level of currency is one issue, when it comes to imports and exports. But as I look at it, what really becomes very important is that there should not be very sharp spikes in the currency up or down, because that is what then makes the whole situation very volatile. And in that respect, at least the Indian currency has actually been much more stable or less unstable compared to the other currencies in the world.
Let's talk about ICICI Bank as well, Ms. Kochhar. While you have mentioned that FY16 total additions to recast assets and slippages are likely to be lower than FY15, how confident are you of achieving this, especially given the number that was reported in Q2? How confident are you of achieving this?
Well, as of now, I think we are continuing to move in that direction itself. Of course, this is all pinned on the basis of certain assumptions that recovery will happen at a certain pace. Some of the executive decisions around large projects will come at a certain pace, but I don't have a reason to believe that will not happen. So I think, given the way I see the situation currently, we are still in the same direction as I have mentioned earlier.
Sure. You did also mention about challenges in your corporate book, and you do have exposure to some big accounts that are under some degree of stress. I know there's some action on the power front, but still sectors like iron and steel are under a fair degree of stress. So what's your outlook on that?
Well, I think we have to recognize that the commodity cycle is at one of its lowest currently. Given the way the global economies are moving, it will continue to be low for some time to come. So we have to build that in now in our planning and in our assumptions. I think partly, there is even in India set of industries which are even globally competitive, and actually, in fact, very competitive and lie in the absolute low quartile as far as the cost of production is concerned. So I think for them, it's actually in a way a little bit of an opportunity to say that as the strongest survive, they would survive. There would be certain set in that industry itself who will actually not be globally competitive, so times would be tough for them. So I think it's important for us to kind of identify which is that set of globally competitive ones, be with them, work with them, make sure actually that they survive, and along with that, whatever else the country can do. For instance, we've imposed the safeguard duty. I think there are other countries who are doing in some cases even more, and so on. So we should watch that and keep doing whatever we have to for our core industries.
The other big concern that the banking sector and the government itself is grappling with is a whole bunch of stressed infrastructure projects that are stuck right now. And one's not able to find a way out of them. Promoters are unable to infuse more equity. What's the way out according to you? Or do you fear that there'll be one fine day the government will force the banks to write down these loans? What's the way out of this mess? Because that's critical to the economic revival, isn't it?
Yeah, but I think we have to handle this with a lot of calm and stable amount of thinking. I think we have to rather than putting all of them in one basket, we have to take project by project and find solutions around every project. The good news is that the assets that have been created on the ground are very good. the good news is that India is a growing country, and once these projects start producing, there will be enough demand for their produce. On the other hand, the issue is that there are, for some reason or the other, these are stuck. So I think it's important that we sit down, again as the whole ecosystem, it's the promoters, it's the banks, it's the, the governments, the central government, the state government and so on, and close those final, last mile issues around each project so that each one of them can start getting into the cash flow issues. According to me, many of them can be solved. If it's not all, but many of them can be solved. And, if we go on solving them stage by stage, there should not be a requirement that many of these turn NPA. But if the solutions get very delayed, then we must also remember that the financing cost, the interest burden itself becomes a burden. So I think, it's really for the whole ecosystem to work together, rather than kind of assuming that the whole thing is falling down, like 9 pins. I think that's not true. At the same time, we cannot be complacent and we'll say that, we'll see whenever the economy revives. I think we have to find that mid path, put our heads down, do solution, project by project solution, and maybe we'll solve many of them, but not all.
Would it be fair to say that unless you solve this problem, we cannot grow at that 8%, 8.5% plus, because this is critical as far as infrastructure revival is concerned and for the health of the banking sector?
See, I think the growth will still come, really from the retail side, the entire government spending that I spoke about. So it's not as if, its growth comes only from private sector investment. I think the other growth avenues will kick in. But private sector investment is also one more ingredient of growth, and therefore it's important. So I think unless this happens, that part of the growth will be subdued.
I want to talk about some of the value unlocking steps that you've taken, specifically with ICICI Lombard General Insurance. By now you've approved sale of 9% stake. With this, their stake of Fairfax goes to 35% in the JV. Does it change the board composition? And do they have a provision to further increase the stake at a later stage?
No, even beyond 26%, actually there was no provision to include. I mean, our JV agreement was really 74-26. But when these changes in the guidelines happened, we had a fair kind of a discussion with the JV partner, and they were very keen to increase the shareholding, and that's how this transaction has happened. So again, there's no future kind of right, so to say, going forward. But I think it's a great step. It conveys, first of all, it actually conveys the right value of the asset that we are holding. And the second is it conveys the confidence that both the JV partners have in the way in which the joint venture is working.
Right, but with insurance FDI being hiked as well, when do you see foreign partners increasing their stake in the life insurance JV as well? That's nothing that the market is anxiously awaiting.
Yeah, I think you will soon see deals on the life insurance side for sure. Again, it's not necessary that only the JV partners have to increase stake. You may find other interested, investors wanting to invest. Yeah, non-strategic investors wanting to invest. So you could see something like that as well. But whichever way, it is an inflow of foreign money.
Capital.
Yeah. So I think you would see.
But by when do you see that happen?
No, I think as we speak, many are being discussed. So you would see some action soon.
At what point would you look at listing some of these insurance ventures, both general insurance and life insurance, because there's some amount of activity in the capital market? At what stage do you think will be a good time to list some of these ventures?
As I have been saying, that we will definitely monetize some part of the investment. That monetization could be either, through a JV partner or to another non-strategic investor or through an IPO. All three options are open. So I think we'll see what we do in the life insurance. But as far as the non-life is concerned, we've just done the sale of stake. So I don't think there's any hurry for an IPO just now.
I do want to talk to you at length about this, the digital disruption of the banking industry, so to say. But first, let's talk about the payment banks, small payment banks. There's been a proliferation of them, for lack of a better word. How does it change things? I mean, I know the consensus view is that it will impact mid-sized banks, unlikely to impact a large bank like ICICI Bank. But what's your sense on how this new competition, how will it change the dynamics of the banking industry in India?
I think it's, first of all, I think any kind of new entrants, set of new entrants do bring with them some amount of innovation, some amount of, competitiveness, excitement and all that, which is all good for the industry. What is very important for the incumbents, and it's not just true only for mid-sized banks, even for large banks like us, is that we need to continue to be ahead in terms of innovation and use of technology. And I think that's what we are focusing on. So while payment banks will come and they will introduce a lot of innovation and so on, at the same time we've been kind of focusing on some very similar things, and we launched our e-wallet, so to say, much ahead of the payment banks coming in. And not just that we've launched it, I think it's become so popular that we've had more than 2.5 million downloads just on our Pockets, which is our e-wallet. So I think the most important thing in all this is that the incumbents also need to continue to remain active, innovative, agile, and keep moving in times with what the customer wants and what the technology makes possible to deliver.
So will you continue with both your partners for payment banks, at least for now? Is that your strategy?
I mean, we are investors there, so yes, in Fino especially. So yes, so we will continue to remain there. And at the same time, we'll continue to keep pushing our own digital initiatives the way we've been pushing.
Sure, but to take it away from India and talk about this global debate that's happening around the world on how these new mobile banks could essentially completely disrupt the business model of traditional banks, and there's a lot of talk and debate on how traditional banks may cease to exist several years down the line. Do you see that happening?
I think in today's day and age, which is so dynamic, business models definitely cease to exist. So it's for all of us to keep reinventing our own business models continuously. It's partly because of the competition that comes in. It's partly because of what technology allows you to do. It's also partly because of what the rest of the system is doing, which is outside your own field, but it changes the field, your field. And then it's also partly because of customer awareness and the customer demands these. So I think on a continuous basis, in today's day and age, we have to keep reinventing our business models. And therefore, you would see a bank of today would be very different from a bank 5 years later and a bank 10 years later. That does not mean the banks will not exist, but the business models could be very different. And even if you look at us, there was one time, of course, 15 years ago, where almost 95% of the transactions were being done at the branches. Then of course there came a time where a lot of transactions migrated to ATMs, call centers and so on. So less transactions were done at the branches, but the channels were the ATMs and the call centers. Today 60% of our transactions get done only at the new age digital channels, which is just the handheld device and maybe internet. Less than 10% of the transactions get done at the branches. So the business model has already changed. We are very different from what we were 5 years ago, which was very different from what we were 5 years before that, and so on.
So banks as they are today will cease to exist like this 5 years down the line?
I don't say cease to exist. I would say the business models of the banks that are there today would be very different, every few years from now.
On a lighter note, when you started your career, banking was the industry to be in. Over the years, there's a huge amount of euphoria. Graduates out of IIM, they want to work for a bank. They want to call themselves as bankers. Do you see at some level it's not so cool to be a banker anymore, and people are, there's an obsession with being an entrepreneur, a technology geek? Has that changed when you go to campuses? If you do still, is that excitement over banking still there, or is that a...
Well, one is that, I think if you look at the rest of the world and you look at India, in India it's still, a very pleasurable thing to be a banker. So, so I think that's, that speaks volumes about the stability of the banking system, the regulatory framework and so on and so forth. So I think there is a lot of excitement on being a banker. The second is that, of course, there is now, a lot more excitement around the fintech and around entrepreneurship and so on and so forth, which is only good. But I would say that the growth of all these sectors is not at the cost of banking or not to substitute banking, but I think many of them actually play a very complementary role and fit across that entire value chain of payments, sit in different parts and play a very complementary role to the bank. So I think it's only good for India that the entrepreneurship culture has also been growing, that there is also excitement about fintech and so on. that doesn't mean that the banks won't exist.
Final question to you, as India's top banker, when you look at these startup valuations, do you get baffled? Do you wonder what's going on? Who's paying this top dollar? Or do you think this industry will also find its normal a few years down the line?
I think a lot of normalization has to come in. This is not the normal level. But finally, the valuations should start reflecting the underlying commerce in any startup. And I think that's when normalization will come. Today, it's not just about commerce. It's about eyeballs, it's about grabbing customers, it's about acquiring customers and so on. I think in the initial phase, maybe this is okay. But, at the normalized level, it will have to be linked to the actual commerce behind it.
But are you surprised that so much money is chasing some of these ideas? We don't have money for large infrastructure projects, but one disruptive, technological idea gets so much of money from venture capitalists around the world. Does that surprise you, or that's the new world we're living in?
I think that's the new world we're living in. But as I said, finally, it'll have to consolidate into some of those where there is real commerce behind it.
Chanda Kochhar, always a pleasure chatting with you. Thank you so much for doing this.
Thank you
so much.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.